Hello and welcome to Crypto Lion. We've made it a duty to bring you the latest news in the crypto space on this channel. You can also check out some predictions for Bitcoin and other cryptocurrencies on this same channel. Please subscribe to our channel and don't forget to turn on post notifications so you can get notified immediately once we have a new video up. Today we think there's something that you should see on the Bitcoin chart if you're a Bitcoin holder. Now we know the whales also fall into this category, but this is specifically for you as an individual that is holding Bitcoin. Bitcoin has risen in price by nearly 300% in 2020, outperforming gold specifically and many stocks. Recent gains have propelled the cryptocurrency to new record highs of above $40,000 in the new year, having traded below $5,000 as recently as March of 2020. Bitcoin's performance has led some analysts to speculate that we're in the midst of a third great price rally in its 11-year history, as investors increasingly view it as a form of digital gold rather than a speculative investment or cash alternative. Since peaking in late 2017 at around $20,000, Bitcoin spent the best part of 2 years in steady freefall before its resurgence in March. Its bounce back coincided with the enforcement of lockdowns around the world as the full extent of the COVID-19 pandemic began to be realized. With economies stalling, funds flooded out of stock markets and into gold and cryptocurrency. Popular belief is that the idea of Bitcoin was born out of the 2008 financial crisis as an innovative form of peer-to-peer electronic cash that was no longer reliant on governments or financial institutions to operate. Even then, mainstream adoption remains a long way off, but investors increasingly refer to the notoriously volatile cryptocurrency as a safe haven asset, with some analysts going as far as to call it digital gold. Now it seems to be living up to the name. Now, a big question that popped up in 2020 was whether Bitcoin will continue to rise in 2021. Looking at past trends, some market analysts are hopeful it will continue to see massive growth before potentially crashing back down. A leaked report from senior Wall Street analyst Tom Fitzpatrick in November predicted that Bitcoin could hit $318,000 in 2021, followed by a painful correction. The Citibank report, titled Bitcoin 21st Century Gold, stated improbable, though that seems it would only be a low to high rally of 102 times. That is the weakest rally so far in percentage terms. Others believe that economic and geopolitical stability caused by the global rollout of COVID-19 vaccination may see a shift away from cryptocurrency investment and back towards traditional markets. The Biden administration could also bring with it a number of regulatory challenges that could restrict Bitcoin's growth in the short term. Jesse Cohen, a senior analyst at investing.com, said that he's more concerned about what Biden's administration could mean for crypto generally, while many expect the Bitcoin rally to continue in 2021. Incoming Treasury Secretary Janet Yellen has previously warned investors about Bitcoin during her time as Fed chair, calling it a highly speculative asset and not a stable store of value. Now, some people expect Bitcoin to remain highly volatile to the downside in the new year, given the potential for more scrutiny and tighter regulation. It's believed that that would see prices fall back from their record highs. The geopolitical uncertainty brought about by the coronavirus pandemic, which saw stock markets crash around the world, could typically influence investors to look towards stable assets like cash or gold. While gold's upward trajectory since March would attest to this, Bitcoin's bull run has largely been the result of massive institutional investment moving into cryptocurrency. Part of the reason for this wide adoption is Bitcoin's finite supply. Only 21 million units will ever exist, meaning it's not susceptible to artificial inflation techniques like quantitative easing. Joining institutional investors have been other major players entering the market and buying up the limited number of Bitcoins in circulation. Among them is PayPal, which announced in October that it would open up cryptocurrencies to its roughly 350 million users worldwide in early 2021. Simon Peters, an analyst at the online investment platform eToro, noted that demand continues to outstrip supply and institutional investors continue to seek exposure to Bitcoin hedge against inflation, both of which have helped keep the price above $20,000. He further said that investors are recognizing that despite the rapid price rise grabbing headlines recently, Bitcoin's real potential remains as a long-term investment to be held for months, if not years. The beginning of 2021 gave a lot of all-time high maximums for a number of cryptocurrencies, that in turn led to a series of positive forecasts for 2021. So for example, many analysts predict the price of Bitcoin at the level of $300,000 at the end of 2021. Although JP Morgan does not give exact numbers, it confirms that Bitcoin has the potential for further growth, as it competes with gold as an alternative means for storing capital. Mike Novogratz, manager of cryptocurrency hedge fund, gives a specific value of $65,000 as a realistic level. According to Stock to Flow, a Bitcoin price prediction system, Bitcoin will reach $100,000 by December 2021. Similarly, analyst Mike McClone from Bloomberg sets a goal of $50,000 in 2021 and $170,000 for one Bitcoin in 2022. To make a forecast for cryptocurrencies at least a few months ahead, it's necessary to consider this extremely volatile market at the moment from 2 points of view. Number one is emotional or behavioral economics, and the second one is from the point of view of the analysis of trading volumes in interaction with price. Since the start of the pandemic panic of March 2020, the total index, which takes into account all cryptocurrencies, has grown by almost 1,000%. The growth dynamics has increased at a stable moderate rate, being in the middle zone. But then just like an explosion occurred, and the growth accelerated. The world is experiencing a similar interest in the growth of Bitcoins, which was last seen in December 2017. People see that Bitcoin has twice surpassed the memorable peak of 20,000 and potentially experienced the characteristic FOMO, which is the fear of missing out. This effect is inherent in many people's nature. At the beginning of January, the trading volume was 3.5 times higher than the average. But what about the price? It hasn't changed dramatically. Why? Well, the most likely explanation is that the coins are flowing on a large scale from professionals who are not afraid to buy crypto since March, to the massive newcomers who rush to buy cryptocurrencies under the influence of emotions. If it is so, we tend to believe this based on observations of historical reversals, not only of Bitcoin. The market is experiencing a culmination, and in the future a large-scale correction is possible, and then it will be most likely followed by a rebound. Denis Vinokurov, head of research for London-based digital asset firm Vechain, said that 30,000 has proven to be a very strong support level for Bitcoin, with consistent dip buying above that mark. Alex Mashinsky, co-founder, chairman, and CEO of Celsius Network, offered a similar perspective, stating that it looks like we'll be retesting all-time highs on the upper side and the 30,000 support levels on the downside. Mashinsky added that if Bitcoin hit a lot of resistance at the $41,000 to $43,000 levels, we may be moving sideways for a while. This sort of situation could very well be true, as Chad Steinglass, head of trading at digital assets firm Cross Tower, emphasized that there is definitely some resistance at 40,000. He singled out this price level as being one where some traders have placed passive resting seller orders since they want to take some money off the table and reduce risk. After pointing to these transactions, Steinglass provided a bullish outlook. He hoped that market makers would lean on those orders, knowing they have a backstop, to trade around collecting bid-ask spreads below 40,000. He added that Bitcoin is probably going to bounce around there for a little while, but the sound of the army marching forward is coming from just over the hill. Steinglass thinks that the buy interest from continued new inflows will overwhelm the last remaining sellers, and the next leg will likely be higher. He also said that it could take some time, but it will eventually happen when something significant happens to stem the flow of new money pouring into the market. Garrick Hellman, head of research at blockchain.com, also commented on the digital currencies outlook. He emphasized that in 2020, crypto markets broke records and entered uncharted price territory. He's also of the opinion that we've entered a volatile price discovery phase, one where traditional technical analysis tools such as moving averages and Bollinger Bands have been largely sidelined in favor of purely psychological metrics. He noted that the market is currently thinking in around $10,000 increments. While this may seem arbitrary, it makes some sense given the massive price dislocations and volatility crypto continues to experience. He brought up a previous forecast where he predicted Bitcoin would reach a $1 trillion market value sometime this year, a milestone that would give individual units a price of roughly $53,000. Interestingly enough, he maintained that Bitcoin could reach the aforementioned price level this month. Going forward, Hellman emphasized that market observers should expect continued volatility until Bitcoin settles into a new price range regime, which could be anywhere from $50,000 to as much as $400,000 per forecast from institutional asset managers like Guggenheim. Let's quickly take a look at this chart. In this chart, the Fibonacci indicator is used and a prediction of 100,000 is made over the next few months. Bitcoin is expected to do its magic and make this run. The Fibonacci sequence is a very powerful sequence, and many people believe they're quite important in predictions because they're present in many natural scenarios. The nearest bull mark in the Fibonacci sequence is around 33,000, from which we can progress to 36 and then 50,000. However, this chart also places support at around 30,000, 28,000, and 24,000 at worst-case scenarios if prices reverse. It is your decision to make whenever you think you should sell your Bitcoin for profit. Remember to also do your research to decide how long you're going to hold or if you're ready to take profit. Thank you for watching this video. Please give it a like and subscribe to our channel for more videos like this. Good luck and happy investing.